As well as the management team of Timken. So now I would like to hand it over to Mr. Kaul, who will give the brief and then on the result and the outlook, and then we can take it on for the question and answer. Thank you.
Thank you very much. I think that we can start the questions quickly, but in general, I think the market is behaving pretty well. We have, everything is moving up, including the alloy prices, which is unfortunate. It has moved too much up. So that is a cause of a little bit of concern. Availability of steel is a concern. But overall, the customers are needing more and more bearings, which is good news, is, cutting across most of the segments except wind. But I think we can cover during the questions. So if there is any question, we can start with that.
Sure, thank you very much. We will now begin with the question and answer session. Participants who wish to ask questions may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Vasudev Banerjee from Ambit Capital. Please go ahead.
Yeah, thanks for giving the opportunity. Couple of questions. One, sir, could you please break down the revenue for this quarter in terms of trucks, rail, and exports?
Sorry, your voice broke. Can you please repeat, Mr. Banerjee?
Yeah, so can you help us with the revenue breakup in terms of commercial vehicle, railways, and exports?
Sure. The last quarter on the railway, we were out of the total pie, it was around 16%. Our mobile, which is, tractor, heavy vehicle, extra was 24%. And can you hear me?
You just said 24% tractor, heavy vehicle.
Mobile. No, mobile, which we call mobile, 27%.
Yeah.
And distribution around 20%. Process industries and others was 8%. Export was 34%.
Okay. So, if I see there is some element of like every year December revenue is typically lower than September. This time your commercial vehicle industry has done very well. Railways anyhow, capex plans also moving up. Any specific reason that sequentially revenue looks on the lower side?
Yeah, there were a couple of reasons. One was that if we compare apple to apple, we had almost zero sales in wind. So that was one thing which got away taken by in this quarter. And second was that in our most of our mobile, it was all the product mix went towards smaller size range for whatever strange reason, which of course we have corrected now. It went to a bad mix area, as you call, to the worst tail of the customer. So it went to a product mix which is more number of pieces, less number of value, obviously it's less margin as well. So it somehow got skewed to the bad end of the product mix range, which kind of surprised and hit us pretty hard. So that was the single biggest reasons in this. While the industry, commercial heavy vehicles, extra trucks were pretty much buoyant. Somehow we got hit with more. Every truck builder has multiple suppliers, and we believing in customer service, so they pushed us. Obviously, our competitor must have rejected the small size ranges, and we got a little bit overladen with those small size ranges, which obviously, then we got corrected. So the product mix was product mix was bad. And then also at the same time, which I'm sure that somebody is going to ask the question, is that while the alloy prices went up, and we also had to unfortunately import steel because of availability of steel in India became an issue with some of the steel plants. A couple of them also had a big breakdown. We had to import steel out of Japan, extra. And this prices coming from our guys, especially our OEs, actually started coming in from January itself. So that was, while the alloy prices went up, price revisions came from January only, so which also hit our the margin as well.
Sure, sir. And this wind segment, which became almost nil, one of your peers had also commented on the same aspect. So is that a temporary issue, or that is going to persist for a few more quarters?
I think it is going to pursue for many, many quarters. As you already know that the reverse auction has brought down the prices to 2 rupees some paisa. And the wind farm guys are asking the windmill guys to slash their prices by 50%. So which means that everybody would have to serve this market at 30-40% reduction in their prices, and cost will not go down that way, and you cannot play with the quality of those bearings. So so this is going to remain like that for some more time. It has to get corrected at some point of time, because when you see globally the price points of electricity out of those wind farms, India is getting aligned, so we were a little bit more. Now the manufacturing supply chain all has to get aligned, which means that more bearings have to be produced in India in order to keep on making money at those low price points. So for many quarters you'll see this little bit subdued only. I don't see wind coming back in any major way. Last year, first 6 months, it was gathering momentum, and then from August onwards it will fell down. I don't see wind being a segment which would really make money for everybody this year. It will get corrected. A lot of automation alignment has to take place, and the wind farms, windmill guys also have to relax some of the norms which are unnecessary and adding to the cost. But that all will take time. So so this year is going to be, I would say, if not bad, tough for wind.
Sure, sir. And last question, as you highlighted that within the mobility segment, your value mix adversity and the imported high steel alloy wheel price that impacted your gross margin. But if I see for last many years, your December quarter typically gross margin tends to be on the lower side, and there is a spike in raw material sales. So anything specific in terms of seasonality for this quarter that
nothing which I can really think of that every I will again, now that you have asked the question, I will check it so that next time around I would look at the data. But generally nothing comes to my mind which is seasonality related. But one thing is sure that we were caught a little bit off guard on this product mix. And once we committed to the customer, so we lived to our customer service, which was the low end of the mix. So that is what really hit us. It was like three things happening to us together: steel prices going up, steel not being available, our commitment to the customers, product mix going the wrong way. So the good thing is that the OEs and Timken, by the way, was the first guy which got in the peer group got the price increases from most of the OEs, and then they started giving to others as well. So we fought a pitched battle with our OEs on right ground, so that started coming from January. And then steel has also eased a little bit. More production is happening. Our steel suppliers in India are also fully now ramping up. We are qualifying a couple of more steel suppliers. Change this product mix slowly to a better mix, which is like larger, more larger, less smaller. So yeah, that was the story. But every December being bad or this quarter being bad, I'll have to check. But nothing comes to my mind which is kind of connected to a special seasonality. It might be a constant.
And the price hike will balance out what part of this 700 bips gross margin decline?
It would be for me tough to say, but it should be a sizable amount on it. And obviously, we also had to import, and there was air freight involved, and all that will also now go away and have. But this would be pretty significant. I can't offhand tell you exactly, but
no, basically we're thinking from the angle that raw mat to sales being around 56-57% moved up all the way to 63. So how quickly we can expect that to go back to those 57% levels? So that's the plain and simple thing.
Yeah, I think that is a better way of asking that question. I think that within next 3, 4, 5 months we should be back towards that range.
So basically 2 more quarters of relatively lower end in terms
of... One more.
Sure. Thanks. That's all for my side.
Thank you. The next question is from the line of Srinath Krishnan from Sundaram Mutual Fund. Please go ahead.
Yeah, good afternoon, sir. Would it be possible to share the, railway production run rate that we are in, sir, because that's where the major capacity expansion happened. And value for, exports value for the quarter was compared to last year, and 9 months performance compared to last year exports. Thank you.
So on exports, I'm just looking at my numbers. We were 34% in this quarter out of the total pie. 17, 18, 32, 16, 17, 31. So I think that that was in that range. On the railway side, now I'm also connected to the previous question. Generally, railway, October, November, December is the slowest period in railways because the contract generally tend to complete in that last quarter. So there might be one actually seasonality issue coming, thinking about that. So railway from January has started ramping up on the freight wagons. The good news on railway is that railway has decided to stop producing the Shalarian normal coaches, which you see all these dabba gadis for passengers. They have stopped producing that. And now they are only going to produce what they call train 16, train 18, train 20. They are going to only produce now passenger vehicles only on taper roller bearings, which obviously is pioneered by Timken in India for Indian Railways, and obviously we have well-established supply chain and production facility in India. So Shalalian, which was using SRBs, which we don't produce in India, and we don't even encourage or sell that SRB 22326, if I remember, and 28 part numbers. Our competitors were producing and selling them for many, many years in India. All that has stopped. They want them all on taper roller bearings, and more ICF, RCF, everybody has started manufacturing the passenger vehicles on this. So this is sudden, and it has happened because if you remember, we were discussing in the previous couple of quarters the accidents which had happened and all that. So this is what has come out of the railway ministry. They don't want to produce the normal Shalarian coaches, and now it will be produced on the Fiat LHB platform, which uses the taper bearings. So there will be a solid demand of taper bearings for the passenger vehicle. Now, it is too early to quantify it, but it is going to be pretty significant and sizable in coming months and, of course, years. So that is going to be good.
Generally, opportunities are, we waited out for a really long time. Do you think this will also one such opportunity that there could be a delay, or is there an urgency from?
There is huge urgency. There is huge urgency. And we have a full team of engineers sitting actually in Europe, working with our design guys from America. We want to give a bearing which would be really high speed and also knowing the track conditions of India. We don't want to give an off-the-shelf bearing which others might like to give to the Indian Rail. We want to give a bearing which can do high speed and at the same time can take care of the serious vibration issue which Indian tracks have. So coming to your question, there is a huge urgency actually. We are getting actually pursued by Indian Railways to start kind of giving the Pro Tools and things like that. As we talk, in fact, we have Pro Tools on the test rigs already. So this is going to be a significant change. We've been waiting for it, as you rightly said, and now Indian Railways is seriously looking at it. And this opportunity is coming at us very fast. The good thing is that we got the capacity available in Jamshedpur. Our state-of-art expansion is ready, and we are just connecting the dots on further little bit of expansion on supporting those assemblies and things like that. So I think that this is going to be a nice, when we end this year, this would be a nice thing out of railways on passenger. Metro, you know the story, it is slowly and steadily going up. On Class E freight, going steady. It is the heavy haul which is going a little bit slow. That is going slow. Another good news from railways is that railways has decided that they would like to outsource. They would like to outsource their workshops where they maintain the bearings. As you know, railway has almost like 300,000 wagons, and each wagon has 8 bearings. So you can multiply 3 lakh into 8 is 2.4 million bearings divided by their periodical overhaul, which is 4 years. So those many bearings get refurbished every year, and railways has decided to start giving private OEs the chance to invest in those workshops. So obviously that is moving at a very fast speed, and Timken, I'm sure, would be the first company to do it based on the fact that Timken was the first company to design the refurbishment of these bearings in 1950s and all that stuff. So those things are coming up very well. Only thing which is a little bit slow is the Class K, which Indian Railways need to do more, and they are already working on it because they got the main line ready, but the loop lines are not ready and all that stuff. So that is happening. And then as we are on the railway topic, the G transportation, many must be knowing that that is up for sale, and there would be a new, I think, owner coming in most probably. Those guys will be more aggressive pushing those locomotives. So I feel there will be huge traction on that, also gathering momentum. Similarly, those are going to become a very priority item for Mr. Goel. So that is also kind of gathering momentum. So huge mega numbers, but it is going to be pretty solid numbers this year and beyond. Actually, 19 and 20 might be great years for railways as far as bearing guys are concerned.
Thank you. The next question is from the line of Mukesh Saraf from Spark Capital. Please go ahead.
Yes, sir. Good evening. Thank you for the opportunity. So firstly is on the CV side. While you did mention that the product mix kind of was more towards the smaller CVs, but if you look at the OEM trend, obviously the larger CVs did quite well. So is there any case of some market share loss that we saw in the larger CVs?
I think that if you see our real hit came from the lower mix, majority to exports actually, and on the heavy commercial India side, we were more or less intact. There our hit was on the margins actually, because both the big OEs did not give us the price increase. Neither they give it to the Excel guys and all that stuff till December end. So our larger mix issue was actually with exports, and our margin issue came out of these guys.
Okay, all right. And so secondly, is there a change in the way the bearings are being procured? Is it now going to be procured by the wagon manufacturers versus earlier by Indian Railways directly? If yes, is there any implication on us?
So this is going to be, as you rightly said, the railway board on the Class E is already disbanded. So all that is going to be, and they have started procurement. So this would be procured by the wagon guys directly, and then they would not be mounting it. So the bearing guy has to even mount it on the axles, and all those changes have taken place. So the only I don't think there would be any, it is going to be same or similar. The only difference is that railways payment to us was within 7 days. Here we have to make sure that it is on an LC, And so there would be a little bit of debate going on how the wagon builders are going to pay. You can understand that the whole idea behind this was that there was a free supply of bearings, there was a free supply of steel. When I say free supply, railways used to buy this directly, and then they would give it as a free supply to the wagon builder. Wagon builder just had to do the fabrication. He used to get the bogie, he used to get the brakes, he used to get the bearing, he used to get the steel as free supply. He just had to employ the guys to fabricate it, put the labor in, inspect it, ship it back. Now he has to buy everything. So in order to buy everything, he needs huge working capital. And most of the wagon builders, I think, are a little bit tight on cash, and wagon steel, everything will cost them money. So the challenge is not going on securing order or servicing order, is actually going how do we get the money back. So obviously, we are going to make sure that it is against letter of credit and all those stuff, and payment is upfront or within acceptable terms. So that is going to be challenged here. But we already started getting orders directly. So that process is begun. And we've been servicing all these guys for last 30, 40 years. So we have not only helped them in whenever they were designing a bogie for export over the years, all that. We got expert teams sitting at every wagon builder. We do everyday mounting, etc. So it is going to be a challenge only on payment collection. Rest might be a little bit easy for us.
Right. So especially I ask this question because from next year onwards, I believe SKF also will be a full-fledged supplier. So it's not like there can be a market share issue, with them, being a bit more aggressive directly with the wagon manufacturers.
I think that on Class C, they are still not full-fledged. I think they are still as part 2. But even in full-fledged, there will be competitors always, and wagon builders will generally go with they would go with long-term further. They will have to see their long-term gains as well. So there is going to be more competition, and there would be certainly more pressure on that. But I think that given our setup and given the set of others, so we should carry on well.
Right, sir. And just lastly, on the ABC bearings merger, could you just give us some update on some timelines and how does that plan?
So on the ABC, we had both ABC and Timken India Limited had the shareholders meet, and both were passed overwhelmingly 99.99 or something like that, around in that range, 99. So it was all passed. So with that, we have filed with NCLT, and we are, I think the NCLT date is in March somewhere. So hopefully we'll get that judgment in around that March time frame, and then there is further procedural activity. So anywhere in April, May, we should be getting in that time frame, getting control of the company. Till that time, they are a competitor to us. But as soon as the NCLT will release their order, we should be any day in April, May kind of time frame. We will start the process of integration and using those capacities. And as you know, they not only make taper roller bearings, they also make spherical roller bearings, and they also have capability, and they make a CRB, and they also make silvering bearings. So it is going to be a little bit exciting after we take control.
Right. So for us, financially, FY19 is when the merger would happen, not like 4.
That is right. That is right. Yeah.
Right, sir. Okay. Thank you, sir. That's it from my side.
Thank you. Next question is from the line of Sagar Gandhi from ICICI Securities. Please go ahead.
Sir, for Q3FY18, our employee costs have gone up by 37% and other expenses have also gone up YOY 34%. If you can please throw some more light on that.
So, Avishan, correct me here. I think we last year we did not give any bonus to the employees. This year we gave bonus. I think that was the major delta. So this was the bonus which we paid to the TIL employees. I think we did not pay for last 2 years maybe. So that was one addition. That is why the employee cost has gone up. Anything else than that? That is it. Yeah, the major delta was the bonus which we paid this year.
And sir, how about other expenses? Other expenses have also significantly gone up, 34%.
Yeah, so other expenses, Avishant says, is in line with last quarter. Hello?
Yes, sir.
Yeah, other expenses are in line, more or less. It is the employee cost which is significantly different because of the bonus.
Okay. Sir, will you be also able to quantify the outsourcing opportunity that you just mentioned from the maintenance opportunity that is likely to flow from the railway side?
Is that is a big, I have been presenting this case to railways for last maybe 10, 12 years, maybe 15. The best and the welcome change is that railways has kind of accepted the fact that there is no value for them to do the refurbishment themselves. So I think that first workshop should be happening in this calendar year, 18. Obviously, to monetize it will take a little bit more time, but I think the first workshop outsourcing, hopefully to Timken, would happen this year. So they are moving pretty aggressively and fast, but they would not go whole hog. So they might do the first test run this year. So I am hopeful that the railway board will accept and do the first privatization of workshop this year for bearings.
So in the next 2 to 3 years, can we expect this opportunity to go up to 200 crores or so?
With railways predicting numbers and all that is not easy. I would say that, the first victory is that railway has decided to outsource. The second is that the first workshop when it comes in. And then based on the success of that workshop, they would start outsourcing all that. But, the pie is huge. You can understand the pie is pretty huge, more than the numbers you quoted. But to realize it, there are many steps in between. Now, how fast the players like us can give that value back to the customer and Indian Railways, how aggressive Indian Railways is going to be this year and after 19. So, time will say.
Sure. And so the last question, so 34% is exports contribution in Q3FY18. And what has been the growth in exports YOY?
What is YOY growth in exports? YOY? YOY 30 crore growth. So not much. 30 crore growth YOY.
Oh, thank you so much, sir.
Thank you. The next question is from the line of Mr. Priya Ranjan from Systematic Shares and Stock.
Thank you. Sir, my question is on the G-class. I think that the capacity expansion you have done recently is also for G-class. So do we see, the export orders or even Indian Railway can be using those kind of class of bearing going forward?
Yeah. This is obviously, this bearing is going to go to the order which GE had won. And the proto should be going in March to GE and in turn to the Indian Railways. But in the meantime, newspapers were stating that GE Transportation, which is where these loco is part of GE Group, is up for sale. And it all depends what happens next in that segment. But as far as the Class G bearing, it is we are going to supply the protos to GE in March, and GE in turn will supply the protos back to the Indian Railway, the proto of the locomotive. So, and as we speak, Alstom is already assembling their locomotive. They have got all their CKD, all their knockdown kits, so they might be supplying the electric loco before the GE one. So this GE will start, small numbers, but the supplies will start this year.
And so what kind of realization difference will be the K-class and G-class?
He is just to, just for, the meter gauge globally in freight uses D. So D, bigger than D is E. E goes on the broad gauge. Bigger than E is class K, which goes on to the little bit heavy haul. And then bigger than K is G, which goes on either locomotive or super heavy haul. And America is already using something called GG, which goes up to 40 ton and beyond. If E is 1 and K is 1.5, 1.6, G is double. And GG is then 2.5 times. So because then these bearings, have to be denser. You cannot make them huge, but they have to carry huge loads. So the multiplication factor goes, realization goes up. So does also the investment.
And next question is on export outlook, how it's looking like. I mean, railway, in the last call you have mentioned that railway is slightly weak, global railway. So
on the mobile side, which is truck, is pretty good. Railway is still weak. And I am kind of happy that this passenger change of railways is happening at the right time. So let us see how it goes. But to the direct answer to the question, global rail is still weak, and global heavy truck is very strong.
Okay, thanks. Operator, you can take the next question, please.
I think we can do the last question. We have covered most of it, Chaitanya.
So just three questions, sir. Just two, three.
Okay.
All right, we take the next question from the line of Nishit Jalan from Kotak Securities.
Hi, sir. Thank you for taking my question. So my first question is, you mentioned that the product mix was weak on the export side. So is it because the smaller bearings are supplied much more, or do you think that the volumes of bigger bearings were much lower? So that's the reason for weaker mix. In the sense, was there a one-off kind of a thing which impacted your revenues in this quarter?
It is not an easy question and an easy answer. Every truck uses bigger bearings and smaller bearings, and every small truck uses smaller bearings and a little bit bigger bearings. So there is always a combination of smaller and bigger always in the system. Now sometimes, and obviously, when we are selling bearings, they are not going to be fitted right away, so they go through their storing, warehousing, and things like that. And then the demand management, the demand planning is also a complicated story based on forecasting and things like that. So it was a kind of I can't call it a bullwhip effect, but it was a kind of an effect where a combination of things work a little bit. It is not directly related to any market condition. It is more like how the demand and management was done. And we have now made sure that we have the right kind of firewall to accept orders, to commit orders in that quarter, so that the good, bad, and ugly all go together. Because, to a customer, you have to supply everything. While you have to give the bigger, you will also have to give the smaller. And we have to be kind of make sure that our mix does not get skewed. So it was more of a how do you facilitate your demand management rather than the end customer issue.
So actually, my question was primarily to understand, was there just a margin impact because of that, or your revenues also suffered because of the mix?
Top line also suffered. Smaller the bearing, less the price. Bigger the bearing, more the price.
Okay. And so my second question is on the railways workshop thing that you mentioned, the opportunity side. But those bearings, right now, how are they sourced? Are they sourced domestically, or those are imported from global players?
Domestic. We make them domestically.
No, sir. You were talking about the railways is looking to outsource workshops, and they have about 300,000 wagon stock and 8 bearings per wagon. And those bearings are getting replaced even now as well, right?
So they are getting replaced now. So what happens is that the residual life of a wagon is 30-35 years. And the wagon has to be mandatorily, what they call as POH, periodical overhaul, has to be mandatorily done every 4 years, which means that every 4 years a wagon has to be actually bogie, and the box has to be dismantled. And from the bogie, there are components like adapters and the bearings have to be dismantled. Once they are dismantled, they have to be cleaned. They have to be, completely taken apart, cleaned, re-greased, refitted, and if there is a broken roller or a cage damage, has to be fitted back because there is safety also associated with it. Mandatorily, they have to change the seals, etc. So currently, Indian Railways is doing this on their own. They have workshops all over India. I think they got more than 10, 12 workshops, Mughal Sarai, Raipur, Yamuna Nagar, all over the place. And they do this activity themselves. Now they would start outsourcing these workshops to guys like us who are the OE guys. And most probably these workshops will be within those areas itself. So for example, where the wagon is getting dismantled, the bearing workshop might be inside that premises. Say for example, in Kharagpur, which is a big workshop, a private player would be asked to put up their workshop inside that workshop, which was till now done and owned by the railways themselves.
Thank you. So the next question is from the line of Preeti RS from UTI Mutual Fund. Please go ahead.
Hello. Hi, sir. This is Sachin from UTI. Just very basic question. Maybe you have answered this in past, but just wanted to be clear about this E, G, and K class of bearing that we just spoke about in terms of opportunity also. So just wanted to understand, are these bearings sourced or traded products, or they are manufactured by Timken India? Just one clarity on that.
Yeah, Timken India is manufacturing class E, class D, E. D we export to Bangladesh, South Africa. Class E we make for Indian Railways, a little bit of export. Class K, a lot of export to North America. Now Indian Railway has started buying it. And Class G will make for Indian locomotives and maybe one day for Indian freight also, but we'll export. So we are making all railway products in India, whether it is freight, whether it is metro, whether it is locomotive. We are bulk of these we produce in India.
And sir, this demand for, there was a talk in past that DFC related or dedicated freight related demand will come in for Class K kind of bearings. So any momentum that you have seen in
yeah, as I said previously, we got a decent momentum on Class E. We got a very good opportunity unfolding on the passenger side, which we call UIC. On the Class K, which is the dedicated freight car, is actually slow. So that is not moving at the speed. Either the railways want to do it or we would love to do it. So that is slow. And the reason is that they have the main line ready. They are building some wagons already. We have supplied bearings for those wagons. But the loop lines are still not ready. So unless the loop is not ready, these wagons, heavy haul cannot jump from unless they don't have that heavy tracks in place. So that is the reason. Class K is going slow. Most probably, hopefully, gets compensated with the passenger opportunity which is getting unfolded.
Okay, thank you. Really appreciate it.
Okay. I think that would be the third last question.
Yeah, this will be the last question.
Thank you. The next question is from the line of Kunal Bhatia from Dalal & Broacha.
Yes, sir. Thank you so much for the opportunity. So I just had a question on, you did mention that in terms of Indian Railways, the shift from the traditional kind of bogies to the new ones, and there you see the opportunity for taper roller bearings. Could you quantify what kind of opportunity would be there in that case?
It is going to be a little bit tricky at this stage to quantify the opportunity. But the need for them, Indian Railways, is to produce anything between 7,000 to 10,000 passenger vehicles every year. That is the bare minimum need. As you know that government has announced so many trains over the years. The stock is mostly on Shellarian. SRBs, which they want to phase out very, very quickly. So depending on the capacity of integral coach factory, rail coach factory, Kapurthala, etc., how much they can make themselves, and will they allow private participation in that as well, If that also happens, then they will make more. So same principle applies. 8 bearings go into each passenger vehicle, and obviously these are a lot more costlier than the freight bearings, and most probably we might like to sell the concept of a sensorized bearing, so that the vibration, temperature is able to be monitored wireless while these trains are running. So depending on how fast rail would like to do it, how fast the private industry, or how far the industry would support that endeavor, then we can really quantify it. But as I see today, it is going to be a nice, decent opportunity. Hopefully in next 2, 3, 4 quarters, we will be able to quantify the market size of it if railways continues on that path.
Okay, so could you share any understanding of what is their capacity currently?
Sorry?
Could you give any kind of understanding on what is the capacity available for them currently with the government?
The capacity available with the government on these, they can make around 6,000 vehicles themselves a year, unless they expand more.
Okay. And sir, similarly in terms of the opportunity in metro, how do you see, how big is that?
Metro is going to be, the main passenger is going to be big. Metro is obviously going to be small, despite that we got Kochi, Lucknow, Bangalore, Chennai. So 5, 6 metros. Generally these metros would not use a lot of cars, 50, 60 car sets. So metros are slow and steady. But when you are converting the main passenger, that is huge.
Thank you. We have one last question in queue. We have the last question from the line of Mukesh Saraf from Spark Capital.
Sorry, last question. Just one question from looking at it, slightly in 16 with revenues of close to about 1,000 crore, and then last year this huge expansion capacities. But last year we did some issues with this coming through. So this year now. So you mentioned last time the order books are quite strong, and utilization expected for this expanded capacity is also high. Just trying to understand when do we see this now how we placed on that side, because we did do this last year.
My apologies, we could not hear your question at all. The voice was completely broken.
Could you hear now, sir? Audible?
Oh, I just can hear murmuring.
Mr. Mukesh Saraf, we request you to go in an area where there's network. I guess we have a network.
Hello. Hello. Hello, is it now?
We seem to have lost the line for the management. Participants, please stay connected while we connect the management back. We have the line for the management reconnected.
Okay, I think that we did most of the questions, and thank you very much for the participation, and thanks for organizing this call. And last question got a little bit disturbed, but when we close this year, obviously our revenues would be more than last year. the trend is that how much more this quarter would tell us how much more we go. On the capacity utilization side of the expansion, I think that was the question. So that is getting with every passing month that is getting better. And unfortunately, as I said, that it would have been very nice had our product mix been strong. The product mix was skewed towards low value items, and grinding and low the machines don't differentiate between small bearing and large bearing, so they get same cycle time, etc. So I think that as I look at this quarter, order book is pretty decent. The wind is bad. On Class K, it is not great, but unfolding on the passenger side. So it would be again, as we are talking, our order book for Jamshedpur plant is pretty strong. We are working with NCLT on daily basis to see how fast we can get the ABC capacities into the fold and close that deal so that we can start utilizing those capacities. And we say goodbye with the promise that after the next quarter we'll meet again.
Thank you, sir.
Thank you very much for organizing this.
Thank you, sir. Thanks a lot for your valuable time. So thanks all the participants for joining the call. Thank you. Now, operator, can we close the call?
Sure. Thank you very much. On behalf of Systematic Shares and Stocks Limited, that concludes this.